Hi there. So it's Keith Griggs here from Redbox Financial. I wanted to do a video just to talk about the sort of things that I would do in a financial health check. These are also the similar sort of things to what I would do if you went on to become my client, except obviously if you're my client, then we'd just go a lot deeper, and also we'd be able to implement things that came out of the health check, maybe to make your accounting software more accurate, which would mean that everything else, all the other graphs and ratios, would just become a lot more accurate, a lot more helpful, and also over time we'd figure out the actual ratios, the KPIs that were really crucial to your business, and we'd elevate those and focus on those. And so we just, if you carried on with this process, the knowledge between us and the insight gained from this procedure would just be much more valuable. And without it, if you don't do anything, I think a lot of business owners are really running blind. I'm really been amazed how quite large companies, how in a mess their accounting was, and some of them, for example, they don't even know if they're making a profit or loss. You know, they see money coming into the bank, money going out of the bank, but they don't pay any attention to it. Maybe they haven't reconciled their bank for some time, or maybe they don't do a proper cut-off at the end of every month. So they might have sales in October and the cost of sales are in September. So if you look at their profit, it sort of goes all over the place because they're not matched up in the correct period, which is one of the fundamental principles of accounting, that you should match incoming expenses in the same period that relate to the same thing. It's called the accruals basis, and a lot of bookkeepers do not do it, even for large companies, and that's absolutely crucial. Okay, so so first of all, looking into someone's accounting software, the first thing I look at is how up to date is the bank reconciliation. Because if you're not up to date, then it means that probably your P&L, there's probably sales and cost of sales and other expenses that just literally are not being picked up by your accounting software. So this is crucial to have this up to date and for everything coded into the correct account. And there's lots of other useful things here. For example, under reports, one useful report, for example, is aged receivables detail. So you can look at all the amounts owing from your debtors. So in a larger business, you might have a whole division, your credit department, which do all this, but smaller companies, you might have to do this yourself. But it's really useful to see which are your old debts, and if they are unrecoverable, then you should write them off or chase them, or you should certainly know about each one and know the reason why they are old and what the best course of action is. And another useful report sometimes is the so-called cash summary, where you can just see basically money in, money out. So I think, well, I made a profit this month, but why has my cash gone down? Then this would give you the answer, because you can just you can see what happens. And here, like with any Xero report, you could just compare with previous months and get some feeling what's going on. And of course you can also export to Excel and do further analysis, such as pivot tables or charts there, for example. This software I really love. It's called Futrli, and this would also be part of a finance health check, or if you were my client, it would be our monthly or fortnightly or weekly review, because it really helps get a handle on both what is happening historically with your business, what your situation is right now, and also what we can expect in the future. either as things carry on as they are, or with different scenarios, like if you do X, what effect will that have on everything? Like buy some more fixed assets or take on a new staff member, for example. So here are some summary KPI points, which are some of them be more relevant to different businesses, but it's useful to be aware of them, like predicted sales, predicted cash, very important, predicted VAT liability, which might come out 4 times a year. This first tab, performance, this is all created, this forecast is created using AI based on all the data that's already in your Xero. So look at all the invoices, the sales invoices and purchase invoices. It knows that they're coming out in the next month. It knows what's come out in the past, so it can extrapolate. And in this example, they've got a very healthy cash balance. And I would argue they've got too much cash in there. What do you need £200,000 for when your sales are only £33,000 in a month? I would say you could probably use that cash either in the business to invest in staff, machinery, stock, whatever, to increase your profits. Or if you really can't use it in the business, then why not just draw it down and to the owner of the company in a tax efficient way, maybe a SAS pension contribution or something like that, and then you can use it in a way for your own benefit that would help build your wealth. So this is the overview, and it also looks at cash, profit, balance sheet in the same way. So this is showing how part of the things that make up this prediction. It looks, for example, these are the invoices due and cash going out of the business, top bills owed, and then 38% of owed is to Mr. Monopoly, for example. So, and also we can always change the dates, like for example if we have this year, we get more information. And then P&L, cash is very important, but you've also got to make a profit, otherwise eventually the cash will run out. So I think these lines are really useful to look at. You can see there's like a September, it expects sales to go up a bit, which has a knock-on effect on the net profit, which is even more pronounced, and also compares with last month, also compares this year with last year for all these P&L items. And you can click on any of these. So expenses, I mean there's a lot of there you go, and it's just got a lot more detail. And here you can do a new prediction, so you can actually change this. You can turn that off. So that's predicted one's past. You can do a new prediction. Do a manual prediction. You can import a CSV file. We could do a formula, so you could say any formula you that works, obviously. But okay, let's cancel and exit. Just giving a sense of the power, under the bonnet type thing. Balance sheet, similar thing. These ratios are really good. So I told it's got too much cash. It's got 4.61 times as much cash as it needs to pay its current liabilities. Whereas here it says a score of 1 is typically good, and here they've got 4.61. So they don't need all that cash. And here you've got similar sort of ability to compare the assets and liabilities against last year and so on. And here we've got a bit of information about customers and suppliers. For example, it looks like our biggest customer is monthly wedding sales. If you click there, that gives a bit more information. We are owed 23,000 over 2 invoices, 11,000 due within 7 days. They've not been paying on time. 1 invoice worth 11,000 is late, and then it's got a risk trend, annual risk trend. So dependency lasts 90 days. 40% of your sales are with this customer, which is not good, which is why it's got a red mark there to flag it up, because it increases your risk, because if they choose not to be a customer, then your sales goes down a massive amount. Anyway, so that's just all on that first tab, which is generated automatically from your accounting software. Now the next tab is also really useful, and here the daily tracker forecast is the previous one. You've still got that data here, and you can create budgets. So you can create a 12-month budget, for example. You can also create a scenario, which is rolling forward as periods pass. So if you take on a new member of staff, open a new division, whatever, you could do a scenario for that. You can create an infinite number of these, and all of these you can actually data sets you can then use in the reporting section, where you can create graphs and compare your actual data against these. But it's very useful to have a budget. You'll be amazed if you have a budget, you'll be amazed how many companies don't have budgets. All the larger companies I've worked for always had a budget, and it's incredibly valuable because it's some sort of yardstick to compare both your sales against, and also against all your costs. And then if something's over budget, then it starts to ring alarm bells, and you think, well, why is it over budget? And you have to have a good reason. So it is a very important thing to do. You can create it from scratch, from last year's actuals, or from an existing scenario, and then you can tweak it and get it your best estimate what it should be. So this is to help you create all these, and you can create it so that you have one line for each normal ledger account in Xero. You can go down to that same level. And this page is very important, which is to create a report. So as you see, they have all these ones straight out of the box. They have loads of them, and you can choose executive summaries or P&L, balance sheet, cash flow, one-page templates, scenario-based, budget-based, daily tracker-based, historical, comparison report, again, performance against last year, and title page. Okay, let's have a look at this one. Annual health check template, cloud to clients. So with any new prospect or client, what I'll do first of all, I'll start off with a straight out the box one, and then as we had more conversations, we might agree, myself and the client might agree, oh, we don't need this, delete that, or maybe we need to focus on this, and then we can create our own section, which would either be a table like this, or it could be a graph, different types of graphs, and you can use any of these data sets, actual, prior year, daily tracker, or the forecasts or budgets we did, or scenarios, P&L, balance sheet, cash flow, by month, day, week, so it gives, you can create formulae. So it's got infinite possibility once you know how to use it, or you wouldn't know how to use it if you had me to help you, because I could do all this bit. So to start off with, this is by quarter, comparing last year and actual, showing the variance. So income's gone up 64%, cost of sales only 49%, so that means that income's gone up more by cost of sales, which is fantastic. So our GP, not only has our income gone up, our GP has gone up as well. Expenses have gone up rather a lot, in fact they've almost doubled, but even so our net profit is still up. Percentage is down as a percentage of the sales figure. Then there's also got our bank accounts there, current assets, banks up. So, and that's just for that quarter, and then you can look at each quarter. So, but I find, rather than the numbers, I find the graphs really more useful, because here you can just see actual data is the light green, which is the one at the back, and here you could see something went wrong. Why did net profit go down to 3.4 thousand in that month. And it's also gone down in September. We need to investigate that. And then why is it up so high there? 18,000. So it could be a timing difference. It could be that things have been sales have been classified into this month when they should have gone into prior months or that month. Who knows? We'd have to investigate that. Or maybe you just had a really good month then and a really bad month then. We don't know until we start looking, but this gives you a place to start. This just compares income with last year. We already looked at that period. We saw that the income was greater, but here it really just smacks you in the face. You think, wow, yes, we did do better there. Whereas when these numbers, you have to sort of dig around to have the same insight. This, for example, looks at the accounts bringing in the most cash. So we already saw that in the other page, the forecasting, and here we can see it in graph format. In this year, yes, wedding sales is, here it's got 44% of cash. We are maybe over reliant on them. And the same thing with money going out, flour wholesale. Here we have the P&L. Here we're comparing quarters with the previous quarter, but we can do it by month. We can slice the data up any way we want. And here we have the balance sheet. And this is a useful graph because you can get a sense, okay, that red one, the biggest amount you spend money on is actually rent. And also it's a bigger proportion this year compared to last year. Here it was only 24,000, here it's 70,000, so all the costs have gone up a lot, but rent has gone up proportionally more than the others. This one, salaries, you can just tell by looking at the two. I think this is slightly less as a proportion, higher in absolute terms, and these are all about the same. So interesting, but you just get a much better sense of things when you look at graphs. So this is the cash closing balance, forecast, projection, which is fantastic to have more cash coming in, but of course it's a sort of waste just to have it sitting in the bank account when it could be used for something else. Income, that's disturbing that it's going down there. To have to maybe look into the reason for that. And this is the same sort of thing we saw in one of the other graphs up there, that net profit spikes there for some reason which at the moment is unexplained. So that's just one of the many reports. Of course there are many more. Let's have a look at the balance sheet. So here we have balance sheet ratios, historical monthly. Something went wrong 20,000%, minus 20,000%. Something went badly wrong with the cash in January. We can't tell what it was without investigating it, but so there's got an explanation down there. So cash was negative, we got overdrawn for some reason, but at least this gives us something to investigate. It also went down there. What's the reason it went down there? Current ratio also looks at debtors as well, and the current assets. Debt to equity ratio. It's good to have a little bit of debt and a lot of equity. So here we have 0.071, which is 7% in other words, which is still reasonably low. If it gets too high, at some point you might think, well, if it's say 50 or 60%, you're thinking, well, are we being over-geared? And then what happens if that debt suddenly gets withdrawn? What happens if interest rates go up? So exposing yourself to more risk the higher this gets. So it's good to keep your eye on this. And return on assets ratio. So I think part of the reason this is so low, 0.6%, is a very low return, and the reason for that is probably we've got so much cash. So it's looking at it. It's another way of saying, yes, use your cash to generate more income, or just distribute it if you have no use for it. You can also add other things here like drivers. You can create driver, which means you can add in other data here which is not financial data, and use it in these same reports. So hopefully that's given you some idea of the sort of things we'd be looking at, both on the initial financial health check and also if you became a client. And I just think it's so valuable to have this information, because if you don't have this information, you're really running a business, it's like with a blindfold on. You just may not know if you're making a profit or loss, or even if you're making a profit, you might run out of cash in 3 months and you wouldn't know about it. Whereas here, you've got all the tax payments, the quarterly VAT payments. They're all easy to predict. We know exactly what the next VAT payment is going to be on the 6th of November, 46,000. We know that, so it's already in the figures, already in the graph. So you would avoid the nasty surprises if you didn't have anything like this. Having this just makes things a lot safer, because it gives you more knowledge, and because you have more knowledge, things are safer, then that enables you to scale faster in a safer way. So it is incredibly valuable. Forecasting, in a way, that's a way of setting yourself a target. Some people find goal setting and targets extremely useful. We can also do that as part of our sort of ongoing conversations. For example, if you go to my site, there's a page there, coaching and consulting, and if you scroll down, there is I might have moved this around by the time you get to see this, but at the moment it's down here. There's some software we can use for goal setting, where you can set metrics, set yourself actions, session notes, worksheets, journals, files, to help plan your business, and we can interact, we can sort of have conversations together, and it all gets documented here, and it can build up into sort of massive database of your thoughts or our conversations and your targets and how you got on with them. So that can really help getting everything down. And the more we talk about goals and what you want to achieve, in a way that makes it more real, more concrete, it makes it more believable, and it's like you're more invested in that reality, which gives you a lot more momentum to actually make it happen. And that's how I think all the real visionaries like Steve Jobs and Elon Musk and people who've built this massive empires, they've had a vision that's so strong, that's so real in their mind, that nothing can really shatter that, and then they build the business just sort of happens based on their vision. But if they didn't have that vision, if they just bought and sold things would be very different. So I think I'm not saying it's magical just because you set a goal that you're automatically going to make it, but I do think it is mindset, and this sort of goal setting, I think it is incredibly valuable if you are open to it, and if you want to have this as part of our conversations, we can do that. I hope you found this useful. If you have a company that qualifies, then I'd love to give you a totally no obligation financial health check, and so we can explore these sort of software, these reports, these forecasts based on your data that's in your accounts, and we can see what your weak areas are, where you want to grow, and it's a great starting point. And whether or not you decide to become my client, I think you'll find great value just from the health check. And I really enjoy these health checks. I find them very interesting, just to see, understand different businesses and to see what makes people tick, and how they relate to the sort of information that's available and how they can improve things. So I enjoy giving them, so I'm very happy to give them away for free if someone wants one, and also if their company qualifies. So get in touch with me if you're interested in that. So see, if you want to contact me, go to redboxfinancial.com and fill in the chat box, and the message comes directly to me and I will answer. That's all for now. Bye.